This has been a huge week for SoFi. We had a new administration come in, and immediately they started making changes that could potentially lead to SoFi bringing back their crypto offerings. And all of this coming 1 week before the company is expected to report Q4 and full year 2024 earnings. SoFi stock is up over 10% in the past 5 days at $18 a share as of this recording. And in this video, I'm going to be walking through all of the major news that we saw with SoFi this week as we head into earnings. Let's jump right in. Okay, so there's a lot of news to cover, but before I do that, just a small plug. If you do enjoy these videos, take a moment to subscribe. I also made a full earnings prediction video, so make sure to check that out as well before the earnings on Monday morning. I'll tag it at the end of this video. And also make sure to join on this channel on Monday morning at 7 a.m. bright and early as we walk through the earnings results and also the earnings call live on this channel. So the stock is up 10% over the past 5 days, and that's impressive. But the more impressive point is that it's up over 27% in January alone. And a lot of this has to do with the new administration, which we just got on Monday with the inauguration. And the reason why this is significant is because the inauguration was immediately followed up with hundreds of executive orders and broad sweeping changes, some of which we'll talk about in this video as pertains to crypto. But I posted on January 20th this meme saying that the golden age for SoFi will start today and that 2025 is going to be a fun ride for all shareholders involved. And we're seeing that largely play out with SoFi so far. And the reason for that is because this new administration is more free enterprise friendly, will spur business activity, will reduce regulatory hurdles. And don't take my word for it. Take SoFi's own CEO, Anthony Noto's word, who preferred this administration for the sheer benefits that they'll allow the company when it comes to maneuvering the macro environment. Anthony Noto said that this is going to be the best macro environment they've had in the last 7 or 8 years. And I'm sure on Monday in a couple of days when we get earnings, that on the earnings call itself, Anthony Noto will repeat those same words, saying that the business has massive tailwinds going into 2025 and beyond, and that the headwinds that we had over the past several years are now behind us. And that's a really bullish thing, right? Because if you look at the last couple of years, the numbers that SoFi has been putting up have been terrific numbers. And yet, when you think about it, these numbers have been in spite of all of these headwinds, right? We saw the global pandemic, we saw the student loan moratorium shut down their biggest segment of the business, we saw a rising interest rate environment. In 2025, all of these headwinds are gone, and SoFi can grow even faster than before. So I think some of these numbers for SoFi's growth is going to get kind of crazy. Now, on Tuesday, we saw the stock rallying. It ran up as much as 10%, and it seems as though many investors share the same sentiments that I was just highlighting because we broke through the $18 range. I made a post highlighting that this has been up 24% in the past 5 trading days alone. And I also made a separate video around it breaking $18 a share. And the reason why is because, we hit 3 year highs on the stock going into earnings. And I also made a call out to the people who are publicly coming out and shorting this company as early as last week. And I'm not going to name them in this video because I have named them in previous videos in the past when I reported that news. They came out shorting SoFi at $15, at $14 a share, and the stock is now at $18 and looking to go higher. It's breaking through on technical measures as well. So we'll see where it goes from there. Of course, earnings is the big catalyst for us all to look out for. And like I said in my video on Tuesday, I don't know if it's going to pull back after earnings. I wouldn't be surprised if it does. But if you zoom out and you look multi-month or even multi-year, a lot of the growth is ahead for SoFi. And look, normally I wouldn't mention shorts, but the reason I do is because the following day, on Wednesday, we immediately got an analyst note. Compass Point reiterated their SoFi sell rating with a $6 price target. Now, another way that I can say this is that Compass Point increased their price target by 50% because they had a $4 price target. Now they have a $6 price target. And of course, that's an optimistic way of saying that. But the fact of the matter is that the stock is trading for $18 and these guys have a $6 price target coming out with notes reiterating their sell rating, even though SoFi continues to climb higher and higher. I made a post about this, and the fact of the matter is it reeks, in my opinion, of desperation because KBW did the exact same thing a couple of weeks ago when the stock price was running. The short reports come out, the sell ratings come out, and these analysts who are clearly bearish on the company try to put a damper on the rally with their single digit price targets. And it's blatantly obvious. And what we're seeing is SoFi, for the first time now, bucking this 3 year trend of actually brushing off these analyst notes because we're at $18 a share and largely outside the realm of possibility for this thing to end the year at $6 a share unless something catastrophically wrong happens. I think investors can more clearly see through these notes. And I said that the higher that the stock price goes, the dumber and more desperate these people look. And very simply, what I'm trying to say there is that this is a negatively correlated event because the higher the stock price goes, the less weight their word carries when they issue these notes or these reiterations of their sell targets. And the reason for that is because there's a huge gap between $18 a share and $6 a share. And I also said that the best thing that investors can do, especially long term investors, is ignore these notes, to not feed into the noise, and to keep trusting their conviction in looking out for the long term. Now, on Wednesday, again, we had an EVP at SoFi, Kelly Keogh. I'm pronouncing that wrong. She sold about 9,000 shares on Wednesday. And, people every single time there's an executive selling will freak out a little bit. But look, it's 9,000 shares. I mean, I know people individually that have more of a position than that. This is a predetermined sale. It really has nothing to do with earnings that's coming up on Monday. It's just funny timing how that works out. And I know I said individual retail investors have more than 9,000 shares, so it's absolutely nothing in the grand scheme of things to be panicked about. But also, in her own portfolio, she has 179,000 shares remaining. So, it's not a significant amount of her own portfolio, even that she's selling. So, it's relatively a nothing burger at all. This is a predetermined sale. Executives have this in the form of their compensation, and 9,000 shares is like it's absolutely nothing. Anyways, moving on. On Thursday, SoFi cut their APY from 4% to 3.8%. And I'll repeat what I said in my previous videos when I've covered this news in the past is that they've cut APY a couple of times now. The most recent cut was 4.2% down to 4% back in December. And now 1 month later in January, we have yet another cut. And the first thing that I'll repeat here is that the company can choose to maintain a high APY to entice more people to choose them as an option. Here's a table, for example, of the current APYs. And even at 3.8%, they're still among the best options for customers making a decision. So that's point number one. Point number two is that we have to trust management to make the best decisions for their business because they have more data to base these decisions off of than we do looking from the outside in. They can see the cost benefits around providing more rewards or keeping more of those profits relative to the demand that they're seeing from new member perspective. Because when you're thinking about the APY, the trade off is that on one hand, members get more interest back on their savings account. And on the other hand, as this number is lowered, it means the net interest margin will be higher for the business. And finally, the third point, which I've mentioned in previous videos, is that you do not want customers to be overly dependent on APY because it waters down the value proposition of your offering. The minute that you increase the APY, more people join, and the minute that you decrease it, less people join. It's not really what you want. And by gradually reducing that number, it allows for a more dynamic competition for consumers who are choosing an alternative, regardless of what that APY number is. Because what we want as SoFi investors is we want the ecosystem and the value of the offerings themselves to speak volumes, so much so that the APY doesn't matter. And they're largely proving this fact out by demonstrating that they're bringing in record numbers of new members, regardless of what the APY stands at. To me, that signals strength in those members who are coming in, are doing so on the strength of the product offerings themselves, not necessarily on what percentage point APY SoFi is giving out. Now, finally, just to wrap up this video, I want to talk about crypto. And it's exactly the thing that I mentioned at the beginning of this video with the new administration coming in and signing some executive orders, because immediately within this week alone, we've seen many different news pieces. And one of them that we got just yesterday was that SAB 121 has been rescinded. And this allows banks to custody Bitcoin. Now, SAB 121 was issued by the SEC in March 2022, and it provided guidance on accounting treatment for crypto assets held by public companies on behalf of their customers. So essentially what it did was it required companies to record these assets, cryptocurrency, as a liability on their balance sheet and simultaneously recognize the corresponding asset for the same amount, along with a bunch of disclosures around the risks involved. By rescinding this, it's essentially allowing banks to custody crypto, including Bitcoin, and it's going to be a big step forward from a regulatory perspective on cryptocurrency and regulated banks. So when it comes to SoFi, this has several benefits that we know of because we know that SoFi inherently is crypto friendly. We know that their management team is very crypto friendly, and we know that regulators have not allowed them to have crypto offerings. We know that they had crypto offerings in the past, but because they're a chartered bank, that also stops them from having the crypto side of the business. And so they have to essentially make a trade-off. The moment that regulators allow this trade-off to not exist anymore, SoFi is going to jump into crypto again. And that's exactly what we're waiting for. In fact, Chris Hager made this point around regulatory hurdles on banks acting as a crypto brokerage. And SoFi CEO responded that same day saying, quote, if regulations permit, bringing back crypto to the SoFi platform would be the plan. And there's obviously benefits to this from a user perspective as well, because we know that SoFi already had a crypto offering before they were forced to shut it down. And if it's one additional offering in a suite of products from the financial services side of things, not only does it lead to more customer attraction and retention for those who want to hold crypto, but also want to do so in the SoFi ecosystem, they don't have to make a trade off anymore. It also leads to revenue growth for financial services, especially within the SoFi Invest segment of financial services, which is not a contribution profitable segment. And it also unlocks an opportunity for further integration in their existing services, because we know that SoFi has a fairly seamless experience across their suite of products for their users to cross buy into. Galileo also supports the backend for crypto payments. I mean, they've done this for other institutions in the past. So the backend is already there. Like everything is there, and they can move very quickly if regulations permit. And with crypto, SoFi Invest, I saw this post from Chris Hager, would flip from negative contribution profit to positive contribution profit basically overnight. And what that means is it will positively reflect in their financials, in their earnings expectations, in their guidance, and in their profitability metrics in 2025 and 2026, the moment that it starts happening from regulators. And on top of that, there's also this perception that we've had over the past couple of years with companies that do and companies that do not have exposure to crypto. As crypto has been rallying, the companies that have exposure, like Robinhood, Coinbase, and others, they have been rallying along with crypto. SoFi and other regulated chartered banks do not have exposure to crypto, and they have largely missed out on this rally as a result. And if this were to change and SoFi and other banks can have access to crypto, then I would imagine that it would be negative for Robinhood, for example, because there's more options for people who are looking for crypto and from a brokerage perspective. And it would be positive for chartered banks because they can now have exposure to this entire space that they didn't before. In my previous videos, I've mentioned that this is a matter of when and not if, in my opinion. And I think that this administration will move fairly quick. I mean, one of my forecasts for 2025, one of my predictions was that this would happen this year. Some of the other panelists on SoFi Weekly mentioned that this would happen later on in the term, but we're already seeing the new administration jumping headfirst into changing some of these policies. I hope management will act quickly. And I also hope that SoFi management is able to share some insights on the Q4 earnings call around crypto in general and what they're seeing internally and what investors can expect the next moves to be with regards to SoFi and cryptocurrency. And all of this is the result of the new administration and the executive orders that they're putting out, and the fact that they're free enterprise friendly, the fact that they're pro crypto, and I think they want to spur more business into the US. And this is why on Monday I said this is going to be a golden age for SoFi, because you have the opportunity for this events to happen, whereas last year you just didn't have the opportunity because the administration was not going to be a good partner for a business like SoFi. Now, of course, earnings is a big determining factor into a lot of these things because we're going to get guidance. I've talked about that in the past, so please check out those videos. There's a 15% implied move on the basis of earnings based on the volatility in the options markets that we're currently seeing, which means that on Monday, the stock price could be above $20 a share. It could also be as low as $15 a share based on that implied volatility. And I'm confident that regardless of what direction that goes into, I think that we could have a pullback just given how SoFi has performed in the past. They triple beat and then the stock has a sell off. Regardless, I think over the next several months, we're going to see the business putting up amazing numbers, issuing amazing guidance, far and above what any analyst is expecting on the street. Join me later tonight on the SoFi Weekly podcast on this channel at 10 p.m. Eastern Time. And more importantly, join me on this channel on Monday morning, bright and early, 7 a.m. as we cover SoFi earnings results live, the earnings call live, along with many familiar faces in the SoFi community who are coming on to join as guests. It'll be probably the largest gathering of SoFi investors in a single place watching earnings together. So definitely join on this channel on Monday morning. Thank you so much for watching, and I'll see you there.